Hello, welcome to another episode of EPMS Tech Talk. I'm Chris Costa.
And I'm Joanne LaFlamme.
So Joanne, what should we cover tonight?
Well, I was thinking we could talk about credit and debit journals and when they're used in AR.
Yep, well actually AR and AP and kind of same functionality. So it's a good question because this comes up a lot. And I see a lot of people try to overthink these transactions. The main design of these transactions is really to offset another transaction.
Okay.
You know, they should ideally be applied to an invoice, or maybe with a debit journal's case, applied to a receipt that's going to get written off. Very, very rare, if ever, should they be just put in as open transactions, because if you're trying to put a debit balance on an AR, just create an invoice.
Okay.
And if you're trying to put a credit balance on an AR, then do it as a credit note. You've got more flexibility with those transactions. Credit and debit journals were really intended to be permanent adjustment type transactions where, like I said, they're adjusting an invoice or writing off a receipt.
So correcting things, basically.
Yeah, exactly.
Okay.
Or, you know, let's say you have an invoice where you want to raise the balance. You forgot to charge them for freight, you forgot to charge them for a surcharge, and you want to just inflate the balance. So you can apply a debit journal to that. So if it's a $100 invoice, you attach a $10 fee, it's going to be $110.
Okay.
You know, something like that. And I actually have a couple of examples of invoices where we can kind of walk through.
Great, let's take a look.
Okay. So again, we're keeping the functionality here tonight with AR, but the same sort of functionality would exist in AP. So if I look at this one customer here, EPMS, I've got a couple transactions here. One, and I forced this to go negative. Okay, and then I've got another one here that's got a regular debit balance. So if I look at this and I want to clear these two transactions up, I could do a $243 and change debit journal against that credit balance invoice, and then a corresponding credit journal against the other invoice to kind of bring those two together. Because one point to make here is you can't just take, if I go back to the screen here, you can't just take this credit invoice and apply it in one step to the debit balance invoice.
I see.
Okay. It has to be done as a credit journal, debit journal.
I see.
Okay.
Okay.
So, and we can run through that here real quick. If I close out of here, so if I do the debit journal first, and customers EPMS, I think the value is $243.75. Okay. With either of these credit debit journal transactions, you would be assigning your GL code, whether you're going to write it off to bad debt, or if it's going to be a revenue code, I'll just put anything in there. And then the add button will let you go select the transaction that you're going to apply it to. In this case, the debit journal is going to apply to the credit balance invoice. So I select it. When you type in the value to allocate, this is where some people will overthink this a little bit. You just want to put in a positive, the absolute value.
Okay, so you don't put in the open value of the negative 243,
Correct.
the absolute value.
Correct. You're applying an actual value to it.
Okay.
Because it's a debit journal, it's going to increase the balance.
Okay.
Okay. So I'll say OK here, and then I'll save it. And then what I would do is immediately do the corresponding credit journal. Okay, same customer, same value, and
you get the wrong value there.
Oh, okay, $243.75. And a lot of times I tell people, if you're doing this to bring one credit balance invoice to another, use the same GL code here, and it'll act as a wash.
Okay.
And then the add button, of course, will let you select the invoice, and in this case I'm going to be selecting the invoice that has the debit balance. And essentially when I'm done with all of this, and again you'd want to put in the same value that you're going to apply, and when I save, and of course these transactions save into batches just like anything else, so I've got a credit and debit journal batch. Once posted, it'll act to move that $243.75 balance from one invoice to the other. One will be 0 and the other one will be reduced.
Okay, sounds good. Now, what is the difference between doing, say, a credit journal as opposed to a credit note? And when would I use one over the other?
Right. Well, the credit note has a little more flexibility where you can void it, you can print it. So it's more technically a credit memo. If you need to send something to the customer, a piece of paper that says, I'm giving you this credit for this work that that we did that maybe was late, maybe it wasn't quite right. Like I said, a credit journal is just a flat-out adjusting entry.
Okay.
Okay, you can't void it, you can't print it. It's really meant to be applied to something else, just to write it off. Or
Okay.
maybe an invoice that's 3 years old, the customer is now out of business.
I see.
Or, or like what like what we just did, where you're just going to kind of move money from one invoice to another.
Okay.
Okay,
Great.
that makes sense.
It makes sense. Thank you.
Anything else?
Nope. I think you've
That's
answered my
good?
questions.
Okay.
Thank you.
Well, this was another episode of EPMS Tech Talk. I'm Chris Costa.
And I'm Joanne LaFlamme.
Please look forward to more to come.